Building generational wealth through a stock market portfolio, very difficult. It requires patience, discipline, consistency, bit of luck, but most importantly, it requires a plan. Plan is exactly what I have as I build my stock market portfolio. I started with 20,000 back in 2020, going all the way to 2050, where that 20,000 will grow to £1 million, 30-year endeavour, and I'll be putting in a minimum £300 a month, part of that consistency. So I now demonstrate my plan and my progress, starting with the performance of every holding, good and bad, and I'll finish up at the end of the video with my overall position, progress against the plan, and the buys and the sells from my portfolio in the last month. So stick around until the end to find out and see that information. And we're going to start with the quality companies part of my portfolio, and that will be with Bank OZK to kick off. Starting off with Bank OZK, it was a good month last month, but nearing the 100% return on that position, and that equates to 5% of my overall portfolio. Now, as we go down in order of value, portfolio, we've got Williams, Sonoma, an absolutely fantastic February, up 69% just in 1 month. That total return of 171, and that is in under a year, I believe, for that position. So really delighted with that. It's one we've chatted about in our Patreon group, and that's where that suggestion came from. Skyworks is the next holding, slightly up on that position, 3% of my portfolio. That's probably about as far as I go with it in terms of positioning within the overall portfolio. So very happy with that holding now. Case of sitting and waiting. And Visa, I would like to make a much larger position, but it's just a little bit too expensive. And for the companies in this quality company section, on high returns on capital, and I don't want to overpay the Terry Smith approach. I think buying Visa at today's prices is slightly overpaying. Therefore, I haven't added to that position. But if the opportunity arose, I would almost double that stake. Dropbox has edged up over the month. And I think the same applies to Google. Well, I would certainly double or even almost triple that position if I was in a position where I wasn't overpaying. Up 58% overall in, I think, less than a couple of years. So we're doing very well there. And Advanced Health, again, has edged up in month. Happy with that holding. Adobe has pulled back quite a lot recently, so we're down to about £800. Looking at that one, and I have reviewed it again. For me personally, still a little bit too expensive to add to that position. Meta is one that I missed out on big time, but it is up 49% in a short period of time. And Unilever has passed that 100% return. It's been hovering around that for a while. American Express, again, another one I'd like to increase, now up to around 150%. And Berkshire, again, another one I'd love to increase, edging up another 6% to £666, 666. Hopefully, not a bad sign. A new holding, CGI, which we'll touch on later in the presentation. And Fortinet, again, I would be happy probably to double the size of that holding. Not quite there yet in terms of the price point. Somero just under level, and in mode hasn't changed much within the month. That takes me on to the dividend stock section of my portfolio. My biggest holding overall is Unum Group. A really good month last month, up 20 percentage points, 182%. Very happy to sit and hold that one. Aviva is the next biggest, and that had a good month as well, so up 63% on that. Again, very happy to sit on that for a long time, as is the case with Legal & General, which is around 3% of the portfolio. Very good month for Investec as well, so back past the 300% total returns of 2020. And Citigroup, an excellent month, up 14 points, up 19% overall. Now, this is quite a bit below book value, and when it does get to book value, approximately, I will be exiting this position. That would make it around about 100% return or so, if that be the case. British American Tobacco edging up over the month, and plus 500 a good month at 38 points. Takes us to the managed by others section of my portfolio, part which is a bit of protection for me. So if I get it wrong, if I muck up, which is definitely possible, it's a 30-year plan here, anything can happen. Mistakes will be made in that time. This is the part that kind of keeps it ticking over and stops me from losing everything. So win by not losing. And the biggest there, Funsmith with Terry Smith, 5% of the portfolio. I'm adding to that position each month. I think his approach is absolutely excellent. And it's up 17% in about a year and a half. The 200 is next. I won't be adding further to that position, but it is up 50%, which is a lot more than some of the holdings in the portfolio. And the other managed fund that I'm in favour of, due to the way they manage the fund and the approaches that Intel Train Fund, that's up over 100%. US index, around about 50%. And a good month for the FTSE 250 approaching £1,000. Good month for this index as well. And the S&P a good month, up 40% now overall. World index up 14%, and then final position up 8% within month. So that is that section of the portfolio. We now move to the cyclical companies. I never want this to be more than 10% of my portfolio. Sometimes it'll be 0, just depends on the opportunities. And this coal company, although down 112% in the month sounds utterly abysmal, that's a lot of percentage points, but overall it's up 719%. So actually, fortunately, that isn't a huge difference. And I have to take a lot of profit off the table in the past for this one. About 3/4 of the holding now has been sold. Intel. And there we have Bitcoin, which had a very, very good month, that ETF. 23%, so it's almost up 100%. I was down 50% at one point. It swung around in 3 or 4 months. Ethereum, however, was down. And very poor outcome on this particular cyclical investment for Altasource. Now on to holdings that when I implemented this approach to my portfolio around about a year and a half to 2 years ago, I already held these companies. Alibaba is down 50%. Also a market leader, down just over 50% on that one. Cumulus hasn't really changed within a month. The next 2 investments have been the worst in the portfolio in terms of total return. Okay, a shout out to those who have joined and supported via Patreon, who participate in the Discord server where we discuss ideas. Of course, the bit you've been waiting for is what's happened within months. So last month, the portfolio was moving towards 50,000. And we've had a really good month, and we're over 51, in fact, going towards 51.5. The year-end target for 2024 is about 54. So that is touch wood, well within sight. In terms of what happened in the last month, I put £300 in as deposit, and the performance improvement, so dividend plus value of the holdings, 1,400. So the bulk of that increase is from performance. So my required run rate to get to the million is 9.57% a year. So although to do that every year for a long period of time, for decades, could be quite tricky in some regards, is actually a number that's single figure digits. So I think it is achievable. I have to be incredibly disciplined and consistent. Now, I can't give you personal advice, but if you're looking to build a stock portfolio, I strongly recommend getting a target, working out the run rate, buying things and tracking it so that you know whether you're on track and if you're going to hit the plan. Here's the breakdown between the different positions. The quality companies part 30%. I want that to be more towards 50%. Cash position, core to the portfolio. I'm not in a rush to deploy it. I would like to be more fully invested to take advantage of the market's update. That's how a lot of the return is made. However, There's really top-notch companies in the portfolio. I think I'll be overpaying for most of those at the moment, which is why that cash hasn't been deployed. But there's no rush. We're back in more normal market conditions where it's really difficult to find more than one or two, maybe even three if lucky, really, really good purchase opportunities a year. It should be difficult to find something of high quality at a reasonable price, or at least not overpaying, because that's how it normally is. Now, I did sell the UK Smaller Companies Fund, which was about £900 or so previously. Didn't like as a managed fund. Had another look at it, had another review of it. Yes, I made a positive return of somewhere around 80%, I think it was, off the top of my head. The way they're managing the fund and the fees. Actually, the only managed funds I want to sell sell train and the fund Smith. I don't want any other managed funds. So that's been sold. As is Direct Line. Look at the most recent results. Look at where they're going. This isn't an exceptional company. It's just another good insurance company. But actually, it doesn't really fit what I want in the portfolio. It's not good enough. I don't want to wait for a turnaround. I want stuff that's really, really good that's already won. So therefore, take it out. Don't have to worry about it. And I made a £10 profit. There you go. 4 buys. 4 buys, but 3 of them were existing position top-ups. Fund Smith, £100 I believe in that one for the month. And the World Index as well. And if that Skyworks position, take it up to 3% of the portfolio, probably topped out now. New holding CGI estimate between around about 12.5% to 16.5% return per year on that one. It looks like a very low chance of failing. It's a good industry. So that was the new position.